Hello everyone and welcome to this Forex webinar. Thank you for your patience. I know we've started a few minutes later than we anticipated. Just checking our sound and all sorts of other technical issues. Anyway, thank you for making the time to come and join us this morning. I know I've said it before, but I would just like to say it again. David and I really do appreciate you taking your time out of your day to come and spend it with us, and we hope to make it worthwhile for you. We're going to obviously look at the Forex market, but before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose, because if there is one guarantee in trading, is that you will lose money. At some stage, at some point, you will lose. If you have a problem, if that makes you really uncomfortable, does that mean you can never enter this business? The answer is no. The long answer is no. But you have to sort of come to terms with it in some way. We talk about it in the Forex program, in the psychology, and the first thing you have to do is really understand yourself, and that may involve taking some kind of test to measure the traits, the big 5 personality traits, and where you sit on that spectrum, because it is a spectrum. And just try and gauge, what is your appetite, what is your tolerance for risk, and can you move the dial across there? You can, but if you are very risk averse, then it is going to be a little bit more difficult. It also helps if you put it into context. I mean, if you think about it, all life is a risk. We take some of the biggest risks in our lives, in the blink of an eye. I mean, if you think about it, when we meet someone and we fall in love and we want to partner with that person and we marry, it's normally based on, very little, if you like. It's what you feel, as it were. So, we are risk takers, but when it comes to money is something slightly apart. I think one day we will do a webinar on risk and risk tolerance and risk appetite and the psychology of trading, because in all honesty, that really is at it's the basis. It's we have the technical, we have all the information, you can have all that, you can make yourself, you can be the best chart reader in the world, you can understand everything about the fundamentals, you can understand how the markets all connect with one another, but ultimately you have to press that button. And if pressing that button is going to makes you feel uncomfortable, and it raises your heart rate too much, and because all you're thinking about is, oh, I'm going to lose money, that's you've got to work on. And I'd like to leave you with a little final thing I'm going to say about this is I don't know where I found this quote, but I think it's absolutely brilliant. It is to do with our brains, and it's to do with our brain trying to keep us, it's trying to protect us. It's saying, why do you want to gamble your money on this? This is such a risky venture. What do you think you're doing? And our brains, the way and when you lose, you will remember that more, and it will hurt you more than a win. And someone described, I think it was a psychologist who described this as, our brains are like, the bad experiences are like Velcro. They like to hold on to it, and good experiences to our brain are like Teflon. They slide away. So I just thought that was a great. Did you like that expression, David? So if you are aware of that, that's the first step. Anyway, what are we going to do today? Obviously, we're going to look at the Forex market. We're going to look at volume through the prism of volume price analysis. We're going to see what's happening on the fundamental side and also the related side, because as we say in our program, and as we say in all our webinars, to become a complete Forex trader, you really have to put all these elements together. But, when we first start, we all start with the price chart, and the price chart that we look at, as I said, is through VPA. And what are the elements of VPA are, well, it's volume, obviously, the price action. We look at candles and candle patterns, and there's a couple that, we try, there are so many candle patterns, but when you start, focus on maybe one or two, and then gradually, as you become more experienced, then you can build up on there. And support and resistance. And I go on about support and resistance every time we start these webinars. And I know I sometimes sound like a record stuck in a groove, but it is so important. But I'd like to look at support and resistance today to help you with deciding whether to take a counter trend trade, because counter trend trading is clearly what it says it is. It's where perhaps you are going to take a trade counter to what the sentiment or the technical picture might be in a slower time frame. And there's nothing wrong with taking a counter trend trade. In some ways, we all counter trend trade, because when you have multiple time frames, what's happening in one time frame could be exactly the opposite of what's happening in another. But you need to know, you need to be able to judge whether it is actually going to be worth your while. And there's all sorts of there's all sorts of factors you have to consider. First of all, obviously in forex is the spread. Is there going, if you're going to be hit with a wide spread and you're really only going for a little tiny amount, is it actually worth it? Scalpers do this all the time. They don't really, they just see a trading opportunity and they go in and out, in and out, in and out. But if that's not you, you want to move to maybe slightly slower, and here slower is relative, and I'm talking about maybe the 5-minute chart. SNR will help to determine whether, well, first of all, it will tell you where any move is likely to go, the potential of the move. The probability is probably, that's pretty much on. We have to look at the volume that's going in. Is there enough volume to support that counter trend move? And then the slower time frames also will determine, particularly if you come to an important level, is, well, that's probably where it's going to come to a halt. And the way I've set my charts up slightly differently on MT4 today, so I'll explain that to you. On top of that, you can add in your indicators. We have proprietary indicators. I haven't got moving averages on my chart. I might go back to putting them on. It's entirely up to you, as long as you understand what the indicators are there for and what are they there to teach you. And finally, very quickly, these are the specialist indicators that we've developed for the forex market, because this is a market of flows. It's a market of flows into individual currencies, and how that strength of flow is then reflected in, which of the pairs is that being most strongly reflected, as it were. And what we want to do is, ideally, we would want a pair where there is, there's strong flow in one and a strong outflow in another. So you get this strong, sorry to use the word again, strong divergence. So the identification of the flows comes from the currency strength indicator. The strength and relative weakness of the pairs is from the matrix. The array tells us the strength of the trend. So it takes a slightly longer, more considered, slightly over longer period of time. And obviously, when we have extremes, this is a market of mean reversion. This is what I mean about counter trend trading. I think is probably more straightforward in forex, because you have these oscillations, you have like these sine waves. That's how this market operates. So in a way, it's you go with the flow. This is what we say. And the currency heat map is looking at the performance of the individual currency pairs across multiple time frames. So in a way, it's a kind of counter trend indicator. So for example, I know David has maybe he can will cover this for me if he doesn't mind. You will look at maybe the monthly, the weekly, the daily. As we see here, we've got pound Aussie on this screenshot, and we have got very strongly green across the slower time frames. But look at the faster time frames, the minute, the 5, the 10, the 15, and in there is a potential trade, but you are always going to be aware that you are going against the sentiment and the weight, if you like, of sentiment on the slower time frames. So this is what I mean by counter trend. And once you look at the chart, and in fact, pound Aussie is one that I picked out this morning, because we've had quite what I call an asymmetric move. I talked about equal divergence. But you can get a move on an asymmetric basis. Pound Aussie is one of them. I'm going to look at Euro CAD because that's a really good example of where support and resistance between the key levels of the third and the S3 and the R3 on the Camarilla. And I'm also going to look at Aussie Yen, and then we'll pass over to David. If you've got any questions, please just pop them in the chat box and we will happily answer them either as we go along or just type them in as an answer. Right, can I carry on, David, or do you want to come over to you? Fine. Right, what I've done with my charts, as you can see here, I've actually changed them slightly. Those of you who come regularly will know that I still have 5 time frames. I'm on MT4. I am restricted in terms of time frames, but to be honest, if you're just starting, maybe not trying to cope with too many time frames all at once. MT4 has its restrictions, but it also has a lot of advantages. So I've got a Renko chart. Renko is a non-time-based chart. I've actually set my Renkos on this platform. This is my live, one of my live accounts at 2.5. And the reason I've set it at 2.5 is because of the conditions of the market at the moment. Just before we move to the chart, let me just swing over investing.com. What does the market mean? The market has been Bank of America sent out a note. It came up on one of my many emails that I get from, I can't remember from where, Bloomberg or something, basically saying that the volatility we have at the moment, they described it as weird, which is, a good way to describe it. It is weird, and this is the what is this? This is the Dow. So we have a big down day, then we have a big up day, then we do nothing. I think that's a Sunday. We do nothing. Then we have a big down day, then we have a big up day, then we have another big up day, and now we're sort of creeping higher. It's been all over the place for all sorts of reasons. We do get these periodically through the year, and we're in one of those phases at the moment. There are so many things. I'm not going to give you the laundry list of factors that are afflicting the markets at the moment, but in no particular order. We have the debt ceiling issue. We have we've got earnings coming up. We have inflation fears. We have we've got the gas situation, which is really shocking. How countries have allowed their storage capacity to be diminished, and of course Russia now has has this hands on. Putin's got his hands on the gas taps, hasn't he? And yesterday coming out with, oh, don't worry, we won't, we're here to rescue you. Sent the futures they're considerably lower, and etc. etc. What else? We've got some issues with the Fed. The Fed. As you know, we had 2 resignations of Rosengren and Kaplan for insider, inverted commas, trading. In other words, they took advantage of the markets last year and apparently made a lot of money. And you say, well, is that allowed? Well, no, strictly speaking, it isn't, because they set monetary policy. So what is, it's not it doesn't take much of a leap of imagination to say, well, if you're setting monetary policy, I'll set it to favor me. Also, Clarida, the vice president, is also possibly going to be investigated. We don't know whether Jay Powell is going to be reappointed. He was a Trump appointee. This is huge. It's not we've got the scandals being featured, but underneath it all, it is massive, because whoever is going to be replaced as their appointees, it could change this dove hawk thing on the Fed. The 2 who have gone were considered to be hawks. Now, in some ways, the market might be happy with everyone being dovish. In other words, everybody having the same opinion, low interest rates, more QE. Is Powell going to be there? Who knows? And we've got NFP on Friday. So, as I said, take your pick. What's happening today? This is Thursday. What have we got? Well, we've got the ECB minutes at 12:30, and we've got Macklem later. As I always say, I've got at least 3 financial calendars. Here we are. We've got the jobless claims, and let's have a look at trading economics. Where are we? Yeah, they're kind of all consistent today. And there's the bond a bond auction, and of course I've forgotten the bond market. How can I? And that is really kind of waking up with yields. The yields are going up, and the 10-year is always the benchmark. Bond market is one of these markets, doesn't move, you know, when it moves, and doesn't have to move very far or very fast, and everyone really sits up and takes notice. And there are key levels on the 10-year that the market will be watching very carefully. It was first 2% is like, oh my God, you know, Armageddon. 1.55 is the current level that they're all eyeing very carefully. What is it this morning? Let's have a look at investing. As I said, investing.com is just so easy to just go and have a look. Yes, it's at 1.5. Now you may say, well, you know, it's at 1.5. 1.5 was the kind of cutoff a few weeks ago. Now it's 1.55. It's the markets, you know, they pick up these, they take these arbitrary numbers sometimes. And anyway, that's the level to watch. Finally, back to the charts. Very quickly go back to my, because we want to have a look at the dollar. Right, this is the hourly. I've actually put the CSIs on my new style profile, and I'll explain what I've done in a little bit more detail, but let's see what's happening. What isn't very encouraging with what's happening at the moment is we've had a couple of little nice moves, but what the matrix is telling us, you see these values that you see across here. Well, one of the beauties of this indicator is it tells us whether we are seeing any decent moves, and on the hourly chart you really do not want to see single figures. So when I said earlier about when you going into a trade, you have to try and assess the risk on the trade. You kind of you become a risk assessor, as it were. Well, if these aren't moving very much at the moment, it's telling you the market, you know, it's really a bit very desultory. After yesterday, it's not really very surprising. We've had some big moves, plus also it's NFP tomorrow, so there's always a bit of a lull between the you know, we've had a very lively day yesterday. Tomorrow is going to be, you know, as I said, the employment numbers, and we are sort of stuck in the middle, as it were, for this session, but there's still plenty that we can have a look at and talk about and show you, so that you know you can add it to your body of knowledge. But this is not you know, this is not encouraging for the charts at the moment, no matter where you look. As you can see here, I mean, points, and to give you an idea of whether that's high, medium or low, on MT4, I just know, because I look at this indicator all the time, when it's moving and it's moving fast, this will be in triple figures. This will be 100, 120, 130. So to be plus 7.58 in the Swiss yen is, you know, there's no way, you know, unless you are with a very a particular broker who, you know, who cuts the spreads down to the bone on the Swiss yen, you know, trying to pick a few pips out of that is going to be nigh on impossible on the faster time frames. Dollar Swiss is down to minus 9.38, so it's across the piece. On TradingView, and it will be rolled out onto the other platforms as well, there is a way now where it will be highlighted. You'll say this is low, this is medium, or this is average, isn't it, David? Is that the three? Yeah. So that gives you an idea, and that immediately tells you the kind of market condition that you are going to be sailing into, and really sailing in the weather is the best analogy that I can give you, because you know, when you lug out your little boat onto the water, what do you look at? You look at the tides, you look at the wind, you look at the sky, you know, you have your weather forecast, and you know, and you set your boat accordingly. And pretty much with trading, it's a brilliant analogy. Looking at the dollar index here, where are we? It kind of moves in ranges. As I said, it's R3, S3 this week as well. As I said, these are the two most important levels as derived from our Camarilla indicator. It's the Camarilla protocol and a bit of something else. And what it does, what we have found is for a price-based resistance, working together with the price-based indicators that we've come up for all the different platforms, but between these two levels, it's almost bomb-proof. Bomb-proof in the sense that you use it as a potential target. It's going to pause, and often as a reversal point, and we have that particularly on the Aussie Yen. Now, on the daily and on the hourly chart, these levels stay here for the rest of the week. We have intraday levels which are recalculated once you have rollover. But again, the dollar, what is it doing? It is doing what it is doing. It is generally bullish, as I've said before. It does follow bond yields, so as bond yields go up, the dollar does tend to go up as well. Plus, as I've mentioned before, there is a political element to the dollar. There's a hugely political element, but the political element I want to mention is the fact that it does tend to strengthen when we have a democratic administration. So something to just to be aware of. Right, the three pairs, as I said, there's absolutely nothing going on at the moment. So let's have a look at Aussie Yen, and the reason why I choose Aussie Yen. Right, I said about support and resistance. So what I've done here is I still have my five charts, but what I've done, I don't know why I didn't do this earlier, but I just sneaked a peek at David's setup on his terminal. I thought, oh, what a jolly good idea of that is actually to put the CSI, and I've got the hourly one here as well, just to tell me, to give me this this picture of, what am I facing out there in the markets. But what I've also done is I've got two other multiple CSIs as well. I haven't quite done this one. Oh, one second. Let's start with the CSI. And I've got the hour, the 30-minute, and the 5-minute. And what this is telling us, let's have a look. So what I mean by trend and counter trend, right? Because this is a really nice example. Okay. Looking at the Aussie from this morning, for example, because this is the Aussie Yen. This is what we were seeing. We're seeing the Aussie climbing. The Yen was kind of not doing very much. It's all a bit, as I said, because of the values. This is reflected in these lines are not going to move very far. They're certainly not going to be overextended. We need some momentum to come into the market. So when they're all kind of like this, kind of, a bit wobbly and kind of going down and coming back up again, as I said, there's no real momentum there. Then you go down to the 30-minute chart, and what do you see? Well, the euro was being bought, and here it got it, and then it turned lower. Now it's going sideways. So as I said, there's really not a good market condition to kind of explain counter trend, because there isn't much of a counter trend going on anywhere. But it's just so that you can see. So if a currency is being bought or sold very strongly in a slower time frame, such as the hour, when you move down to the 30 or even the 5-minute, it could be doing the exact opposite. Now, whether that is going to present a valid, a viable trading opportunity will depend. There's a number of factors, but one of the factors is, where is the price action on the faster time frame sitting in terms of support and resistance? And there are other factors, but that is the one that I particularly want to just cover in a little bit more detail. Now, what's interesting here is, in fact, that the only one where we have a little bit of consistency across the piece is the British pound, ironically. And the reason we did have if you've been watching your charts, you may have noticed the British pound suddenly sort of, there's a bit of volatility come in. I looked over to my news feed, and I think, I don't know whether it was Bailey, the chief economist of the BOE, saying this is all about inflation. Interest rates going higher, tied to inflation, whether it's a good thing or a bad thing, because this is this inflation transitory? Well, it's certainly not in our pockets transitory. Everything's going up like like billio at the moment. but they also have to factor in what the performance of the economy is. I mean, David and I were around in the 70s. Some of you weren't even born when we were around in the 70s. But I can assure you, we had an oil crisis there. The dollar came off. The gold standard was abolished. We had an oil crisis, and we had a 3-day week. There was no electricity. My parents used to have a fast food place, and it could only open 3 days a week because, you know, there was no gas. Then it was electricity. We have a gas crisis. And joking apart, the next few months, the next year, are really not going to be very pretty. And, you know, what we plan to do is through our writing and what have you, is certainly make people aware of, you know, when things from a financial perspective, you know, we can give you the benefit of our knowledge and experience and expertise, at least to help you as much as possible navigate this, as I said, the coming months and year, and it is years. This is, as I said, this is for the long haul. I think I read one of the people that I study with, we were talking about, well, when do you think this is, you know, things are going to be back to, inverted commas, normal? And he was saying 2026, which is a bit depressing. But anyway, right, counter trend trading. Right, the pound, of course, is now doing, you know, it's been bought in the hour. We're going up on the 30, and we are going up on the 5. And the counter trend is this: is in the 5. It's got to a sort of overbought, but it's not really overextended. But there is this little piece here where it has reversed lower. Now, if you are on the seconds charts, and if you are on, you know, very fast charts, that may be enough for you. For most people, I suspect it isn't. So we would have to look at the charts in a little bit more detail for the pound pairs. And as I said, I've actually got the pound Aussie that I'm going to have a look at, but maybe David will have a look at one of the other pound pairs. So that's what I've done with my MT5. Now, looking at pound Aussie is really interesting. And let's take a look. What's the pound Aussie doing on the faster charts? Let's just pull this up. Let's take off all the other currencies just to give us a better look at what's going on. And this is what you can do with this indicator. You just simply take off the ones that you are not interested at the moment. There we are. What's happening, and what you then can do is you can either toggle, you can either highlight the Aussie or you can highlight the yen. It's pretty much up to you. Let's highlight the yen, because the yen, a falling yen, it tells us that the markets in general are actually feeling quite positive. The yen pairs, when they move on block, they haven't been moving on block simply because of this issue that we've had with markets going, you know, just being a bit doolally, as it were. So a falling yen that we see here on the hour, and a falling yen on the 30, and a falling yen on the 5-minute chart, it kind of confirms the picture that we see over here in terms of, where are we? Where are the indices? That's up. That's 129. Let's have a look. Yep, that looks quite nice. It's going up. It's ticking up. What's happening with the Russell? The Russell is the most speculative of all the indices, in the sense that it's a real, you know, it's a real whiz bang index with very, very volatile stocks in this index. But it's very good for pure sentiment. You know, people. And this is the index where investors try and find the next Apple, the next Facebook, companies that don't necessarily, they're not making money, but you know, they could then be elevated to one of the premier indices, as it were. And of course, the Nasdaq is the futures, and that's looking a little bit more positive. Certainly yesterday, that was a down, this is what I said, down bar, up bar, but yesterday that was a massive down bar, and then it had this drive higher. And today, I think this looks like a little bit of a gap up as well. The other index I'd like to introduce to you, I've introduced it to our stock trading group, the webinar group, and that is the KOSPI. Again, because investing.com has all these free resources, and you say, well, why am I looking at a South Korean? This is the South Korean index. It is wildly volatile, and I mean pretty wild. But for some reason, it is the index that is kind of being used as a benchmark for the global economy and if it's so, if this is being, because obviously this is overnight, if it's this is not the futures, the actual index. So this is the big fall yesterday, but look, it's sort of made a bit of a bounce up today. I know we have the Nikkei as well for the yen, but the Kospi is purely sentiment driven. Now, that sentiment is okay in this session. The key is it going to carry on in the Wall Street once Wall Street starts? And this is another thing you have to bear as a forex trader. You know, the sentiment that you find in one session, and this is a market of 3 very distinct sessions, may not necessarily carry over into Wall Street. So if you're thinking of putting on a trade at about, what's the time now? Not so much now, but maybe coming up to 12, half 12. Just sit back and you know, just take a step back, because it may not necessarily play out. So the yen pairs, let's have a look. Where are they here? The yen pairs, they're all over the place on the 5 minutes, but on the Aussie yen, it is actually turning down, the Aussie yen. So of the Aussie yen pairs, the strongest one is this wretched pound, Swiss yen. Pound yen looks, and New Zealand yen look possibly a better bet, because when they move, when the lines go together in the same direction, in this time frame, it's telling you that there is a degree of congestion. It's probably a degree of congestion here, but look, you know, moves start in the fastest time frame and then they ripple through. So we've had a nice little cross on the 5 minute. So there could potentially be, maybe the Aussie yen is one that is going to carry on higher, because Aussie yen too is another proxy for risk. Now, support and resistance. Okay. The third. What I wanted to highlight here is, in fact, let's start at the 5 minute chart level. Let's start at no, sorry. Right, this is what I mean by we've had the move higher. It actually, the move really came off the S3, so it's gone between the S3 and the R3 on the Renko. These are the intraday values for the Camarilla. It actually has stopped dead at the R3, as we can see it. We've had 1, 2, 3, 4, and now it's going to make another run at the R3 as well. I've actually set this to 2.5 pips, so I'm getting a little bit more in and out from the trend monitor. I'm not getting so much of a smoothing on this particular indicator, because prices are quite choppy. There's this big flip-flop in sentiment all the time. If this is going to carry, if sentiment is going to carry on higher and it's going to, you know, drive through into the Wall Street, then what I'd be looking for is I need a good break of this R3 level. How that corresponds on the 5 minute chart, well, it's fairly straightforward. We can see here, you know, the Renko takes out all these wicks and what have you. So we're also bouncing off the volume point of control. We've got a half decent amount of volume that's certainly gone into this candle. There was a wick to the top of this candle. Question I've been asked is, well, sometimes you see great volume and you see a candle volume combination, which you think, well, that's weakness. Yes, it is. And this is where the support and resistance element comes in to VPA, is, well, where is that occurring? Because sometimes when it occurs on a strong level and the VPOC is acting as a reasonably strong level, that will kind of overcome that. We've also got, as I said, this is based on volume. This is volume support and resistance, the VPOC. We're in this range, we're between the volume point of control and we are between the R3. And this is this P, which is reflected, as we can see here. So any move higher in Aussie Yen is clear. It's got to go beyond the R3. Now, looking at it on the hourly time frame, it is actually quite bullish, because the R3, this is the level that's been here all week. It's actually held very, very well, and it held, more importantly, yesterday there was a drive. You see this deep wick to this candle today, earlier on today. So that's the buying that we're seeing here. We've got some volume resistance here. Now, if this carries on higher, where are we looking at? Well, clearly we're looking at this at this is a price-based level, because why? Because this is where it's come off a number of times. So the potential here is going to, this is the potential for this trade on the hour. And then the next level is the R4, because the next level on the Camarilla, which is in the next most important level, is the R4 on the hour. Now this isn't actually a counter trend trade, because what we're looking to do is actually looking to join. We look at the, and I'm just looking at the candles here on the daily chart. There was where are we here? The wicks don't always come through. This is actually the pair have been trying to break away from the volume point of control on the daily chart. And as I said, the R4 will certainly be a natural stopping point. But one of the things with this pair is what happens with sentiment. You know, the Aussie is still being bought. The yen is kind of, when you see these lines, you know, one of them, this is what I mean about an asymmetric trade. There's obviously flow going into the Aussie, but it's not clearly not terribly strong in the Aussie. Sorry, wrong one. In the Aussie yen. So where is it? So it's actually maybe the Aussie dollar. This is the Aussie yen. You know, you just have a look, pound Aussie, that's minus, and you look at these numbers. So Euro Aussie looks, that's the biggest value on a minus basis. So possibly, so we bring the Euro up. Yeah, that looks like there's been a really nice move on Euro Aussie, which is great for me because I'm short the Euro Aussie. Brilliant. So maybe, you know, looking at the flow into the Aussie, the pair to go and look for is the Euro Aussie. But the reason why we've got this, you know, this constraint, this restraint on this pair is because of support and resistance. Right, so that's that one. Let's go and see what the pound Aussie has been up to, because that's been an asymmetric move. Let's have a look quickly, and I've got the same setup here. Yes, this was the move higher that I looked at. This was then we had a volatility candle come in all of a sudden, which was great, which pushed it right up. With the volatility candle, we've now had a reversal back into it, and you know that we've actually had a reversal on the volatility. It's really moving up nicely, but it was being driven more by the pound rather than the Aussie. And this is deceptive because I was looking at it when, you know, the Aussie really hadn't turned over. But so that's what I mean by an asymmetric move. Will this carry on higher? It really depends on where it stops on the support and resistance. And the Euro Canadian, let's have a look. Let's have a look. Where was our Euro Canadian? R3 to S3. Yep, and this was right. Okay. This is a really nice example, as I said, between these 2 points. It didn't quite get to the R3, but it came off the S3. A bit of a scrappy trend higher. And this is what we have here, and this is what the Renko will do. It will actually smooth out the price action that we can see on the time chart, as it were. And for this one, in fact, this was the counter trend. Sorry, forgive me. This is what I was trying to say about the counter trend. This is the pair, because if we look at the daily chart, this is heavily bearish, this particular pair. But when the candle that was being formed, when I looked at it, it was off the S4, and this was the counter trend move that I was looking at here. But it is totally against the overall. I mean, it's a really, really, really horrible, messy trend lower, as we can see here. But I do have this at 2.5, which is why we have this in and out on the trend monitor. But this is what I mean by counter trend here. Using these levels, I knew, coming off the S3, where is it going to go to? Well, if it was going to carry on in a reasonable way, that was probably the point where it would pause. But knowing that I am going against what is happening, you see that, I mean, that is a move and a half down to the down, and taking a move okay, that candle I accept. On that day, there were probably lots of opportunities to trade to the upside, but generally speaking, 1, 2, 3, 4, 5, 6, you've got 7 consecutive heavy down days with a ton of volume going in underneath it. Now you could argue, well, it's had 7 down days, so it's bound to have an up day soon. Plus, we are coming up to a volume support level here at this point. This is the outermost reaches of the volume point of control, volume support and resistance lines, zones, if you like, and that always has a habit of being a good reversal point. And I don't know whether you can see, but there was an up. This price did actually bounce off the S4. The trend dot is there. There is a wick to that candle, and so maybe this little counter trend move that has happened here is just the forerunner, the precursor to the big reversal, because this pair has moved so far and it is at these key levels. So counter trend to what is happening in a slower time frame based on what you see on the daily. Let's see on the levels on the hour also reflect these are weekly levels, as I said before. Markets, when they need to crawl higher, they crawl, they creep higher. I know you have bursts of momentum and volatility, but generally speaking, markets fall a lot quicker than they rise. So, as I said, it's just something to be aware of. But it was just such a nice example of a counter trend move. Now, what was happening on the CSI at the time? Yeah, it was the euro was kind of, where was it? The euro was, yeah, there was a little bit of divergence on the CSI. Let's have a look on the 30. Let's take all these off so to have a better look at it. And you can just, there we are. Yes, you have these, when you have these crosses on the CSI as well, they're also, good points when you could possibly say, yep, that looks, what am I doing? Sorry, what am I talking about here? Nuts. Right, there we are. You've got, a little cross there. So that there, you've got the divergence there, then you have the cross, and now we've got a cross in the opposite direction. So maybe this is actually going to carry on lower. And carrying on lower, where is it going to go to? Well, on the shorter time frame, faster time frames, we'll certainly back down to the S3 where it bounced off the first time, and on the slower time frames, well, if that doesn't hold, this volume support doesn't hold. Let's have a look. This volume support. Let's just scrunch this down. See if there's. Yeah, it's actually cleared some really, really key levels, and it's almost worth going onto the very slow time frames and seeing, oh goodness gracious. So yeah, I mean, there's volume support there on the weekly. You've got some price support there, and you go down to the monthly. Where are we? Yeah, I mean, Euro-CAD is one of these pairs, can be volatile, but can sometimes give you some really nice trades on the very, very, picking up some signals from the very slow time frames. Let's go back to the daily. Let's see what happens. I'm going to keep an eye on it certainly for the next couple of days and see whether in fact that support level does hold based on the daily and weekly, as I said. But the counter trend was this little move here, again using support and resistance. As I say, when it came off here, where is it going to go? Well, there was the VPOC first, and certainly if it was going to carry on higher on the R3, and then using the faster CSIs to just give you a picture of the flows going into the individual currencies. Right, I'm just going to pass over to David. I hope that explained a little bit for you. I know we have some of our students here and also some of our quantum users, and just an idea of how to use these indicators in a different way.
Hi everyone, very warm welcome. I hope you can hear me loud and clear, and hope you can also see my screen. Just move my microphone up a bit. There we go. All right, let's just move that out of the way. Anna's been on MT4. I've got 3 platforms running on mine. I've got NinjaTrader. I've got this, which is TradeStation. This is TradeStation version 10. I was running on 9.5, which is the relationship with interactive brokers, where you have an interactive brokers account and you can hook it straight through to TradeStation. We've developed the indicators on that as well. But I thought it'd be nice just for a change to move to version 10. So this is basically TradeStation version 10 being driven by the TradeStation data feed. And then over on this screen, I've got Trading View. And I just wanted to cover off and answer a question that I think Edward asked, and Anna mentioned it on the currency matrix. And before I carry on, the one thing to remember, we cover 5 platforms at the moment. I suppose if you count MT4 and MT5, one platform, I guess. We then have TradeStation, we then have NinjaTrader, and we also have Trading View. The Trading View is unique in the sense that it is browser-based. The other platforms, you will need a Windows-based solution in order to run our indicators. Now, whether that's on a Windows machine or whether it's on a Mac running one of the crossover bootcamp, or whether you're running with Parallels, which is the solution we always recommend, which is to run Parallels as the virtual machine. So you're creating a virtual Windows environment on a Mac. So you can quite happily run on Mac. But with Trading View, the world really does open up because you're not constricted to those parameters, if you like. And you can now use this purely as a Windows-based, as a browser-based machine, and as a browser-based platform rather. So you can literally use it on any device you wish. So whether you're on mobile, whatever it is, iOS devices, you can use this particular platform. So it's fantastic. The one thing I wanted to highlight here was on the currency matrix, which Anna said, at the time, the numbers were quite low. And one of the things we developed on this particular platform, and which we're going to port across onto, we're currently working on NinjaTrader, and we will go back onto working at MT4.5 as well, and adding these features backwards, if you like, is we also added in this option at the top here and at the bottom, where you've got the all-time high and the average high, and you've got the average low and the all-time low down at the other end. Obviously, the pivotal point is 0 at the middle. And then what these numbers reflect are the distance from the medium, if you like, and the strength of that particular bullish or bearish sentiment. Now, the numbers per se don't actually mean anything, and that's why we added in these metrics at the top to give you a sense of when, for example, 11.10 or 11, is that high, is that medium, or is it low? And that's what this really gives, this benchmark, if you like. And it's exactly the same principle as on the currency strength indicator, where you've got the 80-20. They're not fixed barriers as such, but they're just there as a guidance to say, well, actually, do you know what? The currency is actually moving into potentially into overbought, or it's actually potentially into oversold. And it's a similar sort of process here. Obviously, here you're looking at pairs, but you're looking at them in the same sense, where potentially they are getting up into an oversold region, or they're moving down into oversold or up into overbought. So that's really the numerical values. When you use the currency matrix on a regular basis, you pretty rapidly get to know what is high, medium, and low in the various time frames. But this particular feature we added, it really does help to give you some guidance. As I say, it's only available on Trading View at the moment on the currency matrix. We will be adding it. We are working heavily on NinjaTrader at the moment over the next few months, predominantly to, where are we? Not that one, must be the next one. Nope. Oh, there we go, there's one of them. Right, basically, as some of you will know, if you have the Trading View full package, you get all the indicators we develop free of charge as we roll them out. And the latest release was the radar panel here that we developed for Trading View, which allows you to add instruments in here and all the indicators, so you can actually track things in multiple markets, multiple time frames. You've got the Camarilla on this one, we've got volume here, so you've got the tick volume, we've got the midpoint, and then the pricing here, and over here we've got the trend monitor, we've got volatility and the pivots as well. So that's what we are in the process of developing on NinjaTrader. in Market Analyzer. So let's just move that. And before we go, let me just quickly pick up where we are in terms of, let's have a quick look at where we are in terms of the indices. These are all on 5 minutes. This is the top left is the pound. This was the spike move. We're going to cover that in more detail in a minute. I'll move on to NinjaTrader to cover that one off. This is the yen. This is what the yen is doing on 5 minutes. So, you know, it's not particularly strong at the moment. It's moving sideways, but nevertheless, there are opportunities there. This is down onto the dollar, similar sort of picture there, and over onto the euro, which is moving sideways. All of those on 5 minutes. So that's where we are in terms of the currency indices. Let's move that back out of the way. Let me go to NinjaTrader first. Here we go. And I'll come back to TradeStation because there was a really, really nice move on the dollar yen, which also pulls in a load of examples of VPA in action, trading, all sorts of things. So I just want to cover that one off as well. But this was basically the pound yen. And I said to Anna at the time, as soon as that piece of news came out, I said, wait for all the suckers to be drawn in. I'm sorry, but that's what happens. You know, this is a sucker move. If you were already, and I've said this so many times, if you were already in this move, for whatever reason, you got into this trade early and you're bullish and, you know, you get this result and it works in your favor, terrific. Well done, good luck, close out. If you've got multiple lots on the contract, if you've got multiple contracts in play, either take the whole lot off the table or just leave one, but close out the bulk. When you get a volatility trigger and it's in your favor, or you've just gone into a move and it works in your favor, close out, just sit tight, because the probability is that one of two things will happen. You're either going to see a sideways move or you're going to see a full-blown reversal, neither of which you want. And if it doesn't occur, and if it just had carried on upwards, what have you lost? You've maybe lost a few pips in here. Who cares? Would you rather have lost a few pips in here and have banked your profit, or do you want to be sitting in here in congestion? You've now probably been taken out anyway, as most of these people will have been. This was associated with high volume. When you see volatility, you want to see volume with it, because that confirms that the market makers are actually participating in their move. There is going to be some sort of trap developing. You do get volatility on low volume when the market makers are superficially just racking the market around and they're not participating at all. At least in this move, they are participating, but you know for a fact with a volatility trigger, basically the volatility trigger is a very simple indicator, but boy, it is so powerful. It's $57 for goodness sake. It looks at the average true range. In other words, what it's telling you is that the price action has moved outside of the norm, if you like, the expected average. And when you think about it logically, all volatility is just a compression of time. It is nothing else. What you're seeing here, you're seeing a price action which has moved, what, I don't know, 30 odd pips. Normally for the pound yen, a 30 pip move would take, I don't know, 10, 15 minutes, maybe 20 minutes, half an hour, whatever it is. But all you're seeing is that compression of time into that single candle. The reason you're seeing it is because it's being moved rapidly by the market makers, because they've had a piece of news that they can benefit from. They know what will happen is the vast bulk of the market will try and jump on that move because they are triggering the fear of missing out. That is the single emotion that is the most profitable as far as the market makers are concerned. It is the fear of missing out. You see that move, it's a rapidly moving target. You want to jump on board and make some quick profits, and bang, you're trapped in a weak position. That's the power of the indicator, but it's also understanding the market, how these markets work, who actually controls these markets, the market makers who actually deliver the prices. And one of the questions we often get asked is, well, how is it possible that they can actually manipulate prices? And our answer is always much the same. If you're a store owner, a store manager, you can charge whatever you like. You can move your prices up and down daily, every 5 minutes if you want to. That's the power of being in control of something, an organization, a market, doesn't matter, a store, even if you're only a small shopkeeper, you can price at whatever you like. That's your prerogative, and it works in very much the same way here. And these are hugely profitable moves. You will see them at the open. You know, this is where we are. The nice thing with NinjaTrader, unlike MT4 is you actually see your local time will be correct. So this is 8 o'clock UK time when the London market opens. Through here, we get the usual volatility, you know, usual sort of trap moves that we expect at the session crossover. You see this day in, day out. You'll see it at session crossovers. You'll see it at the US Open at 1 o'clock, 1 p.m. UK time. You'll see it at the London Fix, 4 p.m. UK time, etc., etc. And you'll certainly see it at rollover at 10 p.m. UK time, at 5 p.m. Eastern rather, when all the contracts are settled. Huge whipsaws. If you have tight stops running through rollover, I can guarantee you'll get stopped out. It's dramatic. If you've never watched it, I would urge you to watch it. Anyway, this is where we are. That was the reason why. Why was it? It pinged up because you know, someone said something at the Bank of England about inflation. My own view of inflation is that we are heading towards stagflation, which is basically where we have rising inflation, dramatically rising inflation, and we have a stagnant economy, which is what we're heading for. So, in my humble opinion, yes, interest rates may well rise, which will certainly be short-term positive for the currency, but longer term, I cannot see them rising too strongly because stagflation is the biggest fear that any central bank has when they're dealing with inflation. So that's what occurred with the pound yen, and we had exactly the same on the 10-minute as well. There we go. So it really just confirmed, you know, once and for all. And then when you come off that move, if you're going to trade to the short side, you know, where is it going? Well, we're coming back down to, you know, the volume point of control. And the pound yen, yes, it's a very volatile currency, but that's where we're sitting, and that's where we've been for the last, this is the daily chart now, you know, this is where we're coming out into the summer, August, September, October. We've been trading in this pretty narrow range, and really all that reflects is what is going on in terms of the indices, which we write about extensively. Here we have we're on the YM, the NQ, and the ES along the bottom. That's the daily chart, and at the top we've got the 5-minute equivalents. And really, you can pick any of these. It doesn't make a great deal of difference. We have said it time and time again, they are structurally very weak. As Anna mentioned at the start of the webinar, there are a huge number of factors which are weighing, and whilst we do see these recoveries, the recoveries are not extensive. They are not lasting long. They are running out of, you can see it here. You've got, you know, rising market on falling volume. Is that going to go very far? Not in your life. It's only going to go back to the VPOC at best. You've got some price-based resistance up here, these lines on the accumulation distribution. You've got another level up here, not so strong, that one. This one's a little bit stronger, but you've got lots of it, and you've got tons of volume, and you've got the volume point of control, and you've got all this heavyweight financial geopolitical stuff that's now coming into play. And the three of them are really looking very, very fragile indeed. That's not to say we're going to get a big short is developing, but our view is that certainly at some time perhaps in the early part of next year, you know, there is going to be a seismic shift in sentiment and away from the very much longer term bullish prospect back into a bearish situation. Yes, we had decent buying here. You can see it here. We had decent volume, good volume, really deep wick to the lower body of the candle, pushing up, and you know, no surprise to see that pushing up today. Where's it going to go? Well, you know, it's running straight back into the volume point of control, and we've got resistance overhead. That's the NQ, and finally onto the ES. Very similar picture here as well. That's actually managed to break through the VPOC there with the buying from yesterday. Resistance overhead, price-based resistance, and a very strong level up here, and obviously a lot of volume on the volume histogram, which is going to act as resistance as well. So that's where we are. And let's just go on to the multiple CSIs for a moment, and then I'll go on back onto TradeStation. I just want to show you the dollar yen. This is on, where are we, 1, 3, 5, and 15. Just freshen those up. When you're running on Ninja, on NinjaTrader 8, when you have I have all these workspaces open, you can see them here. If I pull them up, there we are. All of these are open at the moment, but the only one that's active is the green one. And these all go into a hibernation mode in order to conserve processing and really optimize the processing on the system. So it's a very neat way of running lots of different charts, but actually having everything optimized. And basically that's what happened on the pound. And we had this move here, it's selling off. The yen is the purple line here, kick down here, the yen is the purple, just starting to kick up a little bit. It's all a little bit messy now. Some very strong, you can see some strong buying in the Swiss franc here, which is rising quite strongly. So, you know, that's a risk currency. So we will see how that develops later on. Let me just move to TradeStation and just show you on the dollar yen that I pulled up, just to show a really nice example of VPN action, but also trading per se in general. On the left here, this is radar screen. It's immensely powerful. This is a very, very simple setup. I've got the 28 pairs here, and these are all on 5-minute. You can have combinations of whatever. You can have different time frames down here, and this will handle up to 1,000 different markets. So, you know, it's immensely powerful. It's a fantastic option to have, particularly for stocks, as you can appreciate, where you're dealing with huge numbers and you want to filter on goodness knows whatever levels. So basically I've got a 28 array up here, and below it I've just added a simple one here. This is a yen complex, but you could have any complex you like, pound, euro complex, Swiss, whatever, and you can just set it up in that way. And then over here on the right hand side, these are all symbol linked as well. So these little green buttons here, you can have them symbol and interval linked. You can do all sorts of things, global, local, goodness knows what. I won't bore you with all of it. But basically these are all symbol linked. So if I want to look at another pair, I just have to click on one of these, and you know, those 4 charts will immediately flick through to, these are on 1, 3, 5, and 10 on the table. I've just got one time frame here, but I can also change the time frame to whatever I want as well. So let me just pull up the dollar yen again. There we go. And really I just wanted to show you this on the 10-minute time frame. Let's pull that up full size. There we go. Make that a little bit bigger, maybe. There we go. And really what I wanted to show you was this. The volatility and the volume, but particularly we had the volatility candle here, fine. Okay, what are we expecting? Either congestion or a reversal. But what are we actually seeing in terms of the price action, the candles that are forming? It's an effort to rise, it's falling back. We've got a long-legged doji here, indecision. Then we see the market trying to rally again, huge effort to rally, and it falls back again. This is not a sign of strength. This is not a sign of you know, this market's going to reverse. This looks weak. It's got good volume under it, that last candle as well. Then we get the next candle, which is another volatility trigger. And look at the volume, even higher still, fine. Then what follows is the next candle. We get a really nice hammer candle, but look at the volume. We've got exactly the same volume as we had on the previous candle. Now, VPA is all about anomaly. It's about benchmarking. It's about looking at volume in the context of what has gone on previously on the chart, trying to understand that the volume you're seeing on that particular price action, how does it compare with what's gone on before? But even at a cursory glance, you could say, well, we've got 2 pieces of volume here. That amount of volume resulted in that amount of effort. It's all about effort and result. So the result of that effort was this. The result of that effort was this. Completely different candle. And you can therefore assume one thing, that there is a massive amount of buying going on in this particular candle. There has to be. So you're looking at the opportunity for a reversal. The next candle comes along, it doesn't look particularly great, it looks actually quite weak because it's got good volume under it. So you wouldn't be looking at that one. But once the rest of it starts to get underway, you think, actually, do you know what? This is starting to develop. And then you start to see the rising volume as we get into the move higher. And it's just, and of course the other thing about it was that I think the dollar was the CSI. When you're looking at the indicators, they will also help to confirm all this stuff as well. But I just wanted to highlight that because it's just such a nice example of looking at volume and how it compares with what has gone on before. Now, when you're seeing candles rising, you're looking all the time, you're looking at benchmarking, you're looking at this candle, for example, you're saying, okay, we've got a widespread candle, what's the volume underneath it like? Okay, it's that level. Then you're looking back across the chart. You're trying to compare this candle here. You know, you're looking for other candles of a similar size. I'm just looking across here. Maybe, you know, that one's kind of similar, or maybe this one's kind of, maybe this one, something like that. Let's click that off. Something like one of these, you know, and then you're comparing the volume under there, because what you're trying to establish is this guy here, is the volume here associated with this particular candle, is it actually in line with the price action that you've seen previously, or is it out of balance? Is it maybe too high? Is it maybe too low? And what does that tell you in the context of where that particular price move is going to take you? Because if it's running out of steam, then, you know, the chances are it's not going to go too far. Excuse me. And then we get up to the top here, you know, we get a really nice example of coming into, again, similar sort of thing as we saw at the bottom here. You know, we've got two volume bars here, identical almost. The first one's delivered that. The second one has delivered that. So at the very least, you, as a volume trader, you would be expecting some sort of congestion to follow at the very least. It may not reverse full blown and go back down again, but at the very least, you might be expecting it to move sideways, because this is selling into weakness. You've got high volume here, and the market's gone nowhere. It's all about Wyckoff's laws, you know, effort and result, effort and result. The effort's gone in and the result's gone nowhere. The analogy we always use for something like that particular candle is of a car driving up an icy mountain road in the middle of winter. It's steepening all the time. You're applying more gas to the accelerator, to the pedal, and eventually you will get to a point where your wheels are just spinning. You're applying more and more power, more and more effort is going in, and you're not moving anywhere. In fact, at some point, you'll probably go backwards. That is the analogy, and that is what is happening here. It is effort going in, and the market is going absolutely nowhere on this candle. So this, you've got heavy selling coming in here, you've got selling coming in here. The market is not receptive to buying. The sellers are moving en masse, and you've also got a pivot high to the top here as well, just to mark it off for you. And then you get a nice down candle here. So this little mirror image here of these two candles here and these two candles, a really nice classical example of how to interpret volume and price across the chart, benchmarking, looking for anomalies, and then interpreting what that is actually telling you at the end of the day. Right, I'm going to, did you want to add anything else, Dunning, or? No? Okay, I'm going to pause it there, I think. Just drop that out of the way. Let's just go back and see where our pound yen is. Let's pull that up. So, you know, it's no great surprise. That's where it is. It's back to the VPOC, and all the guys who got and girls who got dragged in here will now be regretting that decision. It's the fear of missing out. So if you're in a position and you have profit and you get one of these and it works in your favor, terrific. Close out. It's what I do 99% of the time. And the odd 1%, I may, you know, wing it, but generally speaking, almost certainly I don't. The alternative is obviously if it works against you, that's a more difficult decision. You've got to decide, you know, am I going to take the pain? Am I going to chance it that I might get lucky and get out of this position, or do I just close out and move on? That's the more difficult decision if you move into loss. If you're in loss and you get deeper into loss, you know, you've got to take a decision. You might get stopped out anyway with that. So there we go. Let me just wrap up, show you where all the bits and pieces are. This is quantumtrading.com. This is where you'll find all the indicators. And can I also say, we do all these platforms. We are constantly moving customers from one platform to another. We never charge for that. I know companies that do, and I think they're absolute rogues. Sorry, but that's my opinion. It's an absolute disgrace. If you invest in an indicator with us, and maybe you start with MT4 or TradingView, and you then decide you want to migrate to Ninja, or you want to migrate to TradeStation because you can access other markets, or whatever it may be, we make that happen for you. We are constantly moving customers from one to another platform because we understand once you've made the investment with us, why should you pay anything more? It's outrageous. I got off my soapbox. So you move across from one platform to the other, we just make it happen. It's very seamless and very simple, because we understand that as your trading requirements change, you will actually find that perhaps, one platform you're on, you prefer another. For example, with TradeStation, you might prefer to have the power of radar screen. Fine. With NinjaTrader, you might prefer to have market analyzer. You've access to different markets there, etc., etc. Everyone has a different view. Everyone likes some platforms, doesn't like others. TradingView, as I say, is fantastic. It's mobile based, so you don't need Windows. You can just log in from wherever you are. It's great. But it's not for everybody. So that's where you'll find them all. Those are the 4 platforms. As I say, we are working on NinjaTrader at the moment. We are developing all the indicators across for Market Analyzer. So you will have an equivalent radar panel in NinjaTrader. And if you have the full package, as always, you'll get that free of charge. After that, we are developing some specific indicators for Ninja. And we will, as I said earlier on, like the currency matrix, we will be adding those features that are on TradingView, we're porting them across onto the other platforms in due course. They are on TradeStation as well, by the way, that particular feature at any rate. If you buy one indicator or a couple of indicators and you want to upgrade to the full package, or you want to upgrade to the education program, you will always get a credit. The only time you pay any extra in moving platforms is if there are difference in price, because with NinjaTrader there are more indicators than on MT4 because we have tick charts. So that's the only difference you pay if there is an additional indicator or a couple of indicators that weren't on your original platform. But in terms of charging you for transferring across, it's 0. And you have 24/7 support, and it's literally 24/7, 365 days a year. We have customers all around the globe. We have to provide 24/7 service, Saturday, Sunday, and even holidays and high days. We are around. It's as simple as that. And once you've bought the indicators, there is nothing else to pay. This is the education program, Quantum Trading Education. We started with the Complete Forex Trading Program. It's been running about 3-4 years now. It's hugely successful. It's called that because that's exactly what it is. There are around 450 lessons in there. There's about 250 to 300 hours of video in there. It is all there, everything you need to know. Deep dive into a VPA, as you would expect, relational analysis, which is so important, fundamental analysis, the psychology of trading, mechanics of trading module, and then you've got all the stuff down here as well, how to use the indicators, pulling it all together, topic webinars, there's masses of it in there. And then included in it are 13 PDF downloads, which take it on to the next level. And in addition to that, of course, you have the VPA Traders Chat Room, which I've got up here. Won't pull it open, but it's up there, which is hosted by Anna and myself, and which you are welcome to join, where you will find all your fellow students. And it's on all the platforms as well. So you just literally choose the platform of choice down here, and on you go. We bolted on this last year, which is the funded Forex program, to give our students the opportunity to leverage that knowledge with large accounts. There is no risk to you as a trader, as a student. All you are required to pay is an entry ticket, if you like, to the 3 levels of the evaluation account. You decide which one you want to start with, $5,000, $10,000, or $15,000. It's our money, not yours, so you have nothing to lose. You pay your entry fee, and that is it. You cannot lose any more than that, but you decide where you want to start. It's called an evaluation level because that's what it is. You are basically evaluating your trading skills and putting to the test your trading knowledge to find that consistency that we all need. And once you've done that on the evaluation level and achieved the very simple percentage profit target we set, then thereafter we multiply that level by 4. So if you start on 15,000, we take your next account will have $60,000 in it, and thereafter it doubles. So you go from 60,000 to 120, 244.80, right the way up to $2 million. You're rewarded at each level. On the evaluation level, we kick back a profit at 35% payback rate. Once you move into what we call the portfolio management stage, which is the next level post-evaluation, you get paid back at 50%. And if you make it up to the 1 million and 2 million levels, then you get paid at 60%, and it's significant sums of money, I can assure you. But remember, it's all our money, it's not yours. You have nothing to lose. The evaluation level, you are only allowed to trade the 28 currency pairs that I had up on TradeStation there. Once you move up to the portfolio manager level, we broaden it out and you can trade indices and gold on that level. The only time limit is on the evaluation level. You have 12 months to complete. There are no other time limits on the other various levels, and you just carry on trading as you would normally. There are, of course, risk and money management rules. You would expect it. They're very clearly described in the PDF that you'll find on the inside. You cannot order this independently. You have to be a student. You will not find access to it outside of just for its search. The only way you have access to this program is for our funded students because it is exclusive to them and to them only. Finally, you'll find Anna over anna@cooling.com, or you find all our posts down here. Anna is actually going to be starting a new forex site, which will be forex only. So this will very much be stocks and commodities and indices, and the new site will be very much forex, moving really from Facebook onto a forex-based site. So we'll be launching that in due course. You'll find all the books up on Amazon. I've actually got them here. This is where you'll find the VPA book. That's ranks nicely in investment analysis and strategy, and also over on, as you would expect in the forex world. Just click on that. Huge number of ratings, which is very humbling, I have to say. Number 2 in foreign exchange, there we go. And Forex for Beginners is up here somewhere, there we are, and a couple of the others as well. 3D books there, and Forex trading using volume price analysis down the bottom there. So it's very humbling. We do receive a lot of comments, very positive comments about VPA and how it's helped traders, and you'll see a lot of those comments up on the book in Amazon as well, publicly available. So, you know, we are just delighted that it's helped so many traders around the world. And it's a very humbling experience, I can assure you. So there we go, that's it. Hope you've enjoyed today. We will be back this afternoon. I think it's 3 o'clock, we'll be back then. So thank you very much indeed for coming along today. Hope you've enjoyed it. We do appreciate it, and stay safe, enjoy the rest of the trading day, and we will see you again soon. Bye for now.